Good afternoon, everyone, and welcome to yet again a session on export learning. We will wait for 2 more minutes before we roll out the program. We are just waiting for participants to join. Thank you very much for joining us on a Tuesday afternoon.
Chaitali, we can start.
All right. Good afternoon, everyone, and we officially begin with a warm welcome to our panelists, our chairman, Shri Dushyant Mulani ji, our honorary secretary, Shri Sudeep Dev ji, our co-chairperson of the IIFF Training Institute, Dr. Neerav Thakkar, our Director General at FAI, Dr. Pramod Sant, and of course, our man of the hour and the most important person today, Mr. Gaurav Vasavda. And a warm welcome to all our participants. We have already crossed 110 participants, which is wonderful. Today's session is the part two, the concluding part of FEMA. The first part dealt with exports, and today the topic is the life cycle of an import shipment and issues that we face in closing of a bill of entry in IDPMS. All of you would know that IDPMS is called the Import Data Processing and Monitoring System. Without further ado, I would now request our chairman, Shri Dushyant Mulani ji, to please give his opening remarks. Thank you very much.
Yeah, thank you, Chaitali. Very good afternoon, friends. Today, the endeavor of FFA is single-minded approach that this team has is to enrich members with various facets of clearance. And for that, friend, today we are most fortunate to have with us the eminent speaker today in this, who's having a vast domain knowledge, Mr. Gaurav Vasavda. He has a vast experience, knowledge, and legal acumen, which he will be sharing with us today. And way this program has been curated, I thank our IIFF team, Mr. Tej Contractor, Dr. Neerav Thakkar, Dr. Sant, Chaitali, under able guidance of our entire office bearers, Mr. Sudhir Agarwal, my honorary secretary, Mr. Sudeep Dev, who works day in and day out silently to execute these programs, and our secretariat team, Sagar, Swati, Pandu, and everybody together. Foreign Exchange Management Act is something which we deal with it in every document. Yet, when we took a survey to understand how is the situation of understanding of the knowledge, we found that this is one aspect which we need to touch base and convey this information to our members. Because there have been substantial situations where a custom broker, a forwarder, a logistic service provider, when they deal with any export or import transaction, this is one facet which we need to understand and imbibe in our day-to-day compliance program thoroughly. Normal situation and free of charge export consignment. What is the GR waiver limit available? Somebody will say US dollar 25,000, somebody will say INR 25,000, what it is exactly. Sometimes we get a situation where a free of charge consignment is being shown for IDPMS remittance. Sometimes export shipments are getting missed out on certain of the EDPMS connectivity. What happens when an exporter gets a drawback and the inward remittance doesn't come in? What is the time limit for inward remittance? Or what do you do when you want to send a consignment for repairs and re-import, or you want to send a free sample for trade promotion abroad? What are the GR waiver norms? What are the issues that we need to advise clients and understand the important legal provisions? This can lead up to a lot of discomfort and uncomfortable situations subsequently. And the agencies that deal with this is none other than Enforcement Directorate directly thereafter. So friends, not taking much of a time, we have a lot of questions. I would urge all to put your specific queries in the Q&A box. One by one, our team will, after Gaurav by completes his address, we will be taking up. And once again, thank you all for joining in large numbers, and we'll take this program ahead. Over to you, Dr. San, Chaitali and Sudeep sir.
Thank you, Dushan Bhai. Wonderful speech and very well spoken, and it lays the context to it. Without further much ado, I would now request Dr. Sant to please give his comments. And like Dushan Bhai has said, we would request everybody to use the Q&A box to please put in your questions and refrain from putting it in the chat box. We will not be able to curate that. Going forward, should you have any other topics that you would like us to cover under exports, because this is a series that we have dedicated only for exports, please do give us your suggestions and we would be happy to look into those topics for future sessions. Dr. Sant, over to you, please.
Yeah, thank you. Thank you, Chaitali. So warm welcome to everybody. And I am happy that we have today faculty Gaurav Vasavdatta once again. When we did a first webinar with him, there were so many questions, so many topics were there. And it was quite, really, we found that it is important that we have one more session and we are able to guide the team this complex topic. So I just wanted to introduce Gaurav Vasavdatta, which we have done earlier, but still it is important because there are many new people who have joined. Gaurav Vasavdatta is an ex-banker with 40 years of banking career. He, in addition to his honors graduate, he holds the diploma in international banking, certificate in foreign exchange operation, certificate in trade finance from Indian Institute of Banking and Finance. After his career with bankers, he has started actively involved into training and seminars for bankers as well as corporate. He has conducted more than 750 training sessions on this subject. So you can imagine the depth, and with bankers, with 200 sessions with corporates, and he's a regular speaker at seminar organized by FEO, Export Promotion Council, in last 4 years. So we are lucky to have Gauravji here. He's a regular guest faculty at Foreign Exchange Dealer Association of India, Indian Institute of Banking and Finance, And he is also associated with Ahmedabad Management Association, Exim Institute, uh, uh, Global Exim Hyderabad, CII, ASOCAM, uh, to name few of them. He also conduct company workshop on international trade, FEMA, RBI guidelines, and related compliances. So we are lucky to have today Gauravji for this, and I'm quite sure that this will really be helpful for people. Those queries which we could not ask last time, we were able to save, get some more answers on that. So thank you, Gauravji, for joining. Yeah, uh, Chaitali, should we start his session,
Yes,
presentation,
please.
or you
Rao
want?
Sahib,
Uh,
yeah, I will just ask Rao Sahib. Rao Sahib, would you like to say a few words before we start off with the session?
Anybody, Rao sir, Nirav ji, Sudeep sir?
Nothing. Go ahead.
Okay, thank you.
Yeah.
All right. Thank you very much. Sudipda and Dr. Nirav, they have the most important job and they're going to do that. So fair enough. We are ready to start. Gaurav bhai, over to you.
Thank you. Thank you, sir. Thank you, Dushan bhai, to the right perspective in place. Thank you, Dr. Sant, for the introduction. And I must thank Dr. Sant and Triple FAI for bringing me back again here on this forum. Glad to be here with the dignitaries, as Dushan bhai said that there are doctors here. So maybe something we can pitch in to the knowledge of other people also. And I would definitely, whenever you sit with somebody, I move across various places or within the town also. But I have to pick something. So I will pick something at the end of this session or seminar also. So just share my presentation and there we go from there. The screen is visible, sir?
Yes.
Yes, it's visible.
Okay. So life cycle of an import shipment and issues in closure of bill of entry and IDP. So our previous session was focused on the RBI guidelines on export and imports, both combined almost. And in this session, we will only focus on the import-related import shipments and the IDPMS related issues, purely from the perspective of FEMA. The perspective also takes us to other aspects like filing, the DGFT related issues, custom related issues, which of course you all know. But from my side, whatever inputs I have from my banker colleagues or maybe from the market participants also, importers particularly, that I'll try. Agenda part. So, what is the starting point for an import transaction? We are all into learning sessions here or there. And I'm sure that you would also be there in the learning sessions in turn with your clients, those who are actual importers. So my first point where an import transaction starts is the contract order pro forma, which our client or an importer does with his overseas supplier. Now, if he takes care of certain items there and there, and which is actually translated or transmitted to a customs broker or a CHA or somebody, then I think this error rate would definitely go down or the issues will not be there. So the first point in my view is that can we go back and then talk to our clients if there are errors, that how to construct a contract pro forma and maybe what things they should not miss out. So then in turn, they are not missed out in invoice or any other document. And then we have our own maybe slice of issues when we handle those transactions at port or filing of bill of entry, etc. So this is one aspect which I wanted to bring here. The regulatory bodies. Now, we all know that it is not only FEMA. So, Dushan Bhai said that when we handle any transaction, FEMA is there around us, or we are the users of FEMA. But we are not only the users of FEMA. FEMA is one of them. So, let us see. The regulatory bodies first is DGFT, because without IC, I cannot move forward. We have foreign trade policy related maybe issues, guidelines are there. Then HS code, others like SIMS, etc. So that we need to see. Now the next comes is customs, because ultimately customs is going to clear. So what documents are required, how valuation is there, the duties applicable, clearances, notifications, etc. are all required to mention. The inspection agencies, commodity specific requirements are there whenever goods are imported, maybe the custom related inspection or the other aspects covered. And lastly, the Reserve Bank of India relating to documents, timely imports and timely. Here we are concerned because ultimately there is one regulator who is concerned with the money part, because ultimately when we import, the money is going out. So a regulator has been placed who is monitoring the flow of money, and then it is linked to what customs is. Now, when we talk of RBI, the RBI does not have its own powers. RBI has been given a power under an act which we call Foreign Exchange Management Act. And under that act, RBI issues regulations and master directions. So we have a master direction on import of goods and services. That master direction is as of now currently applicable. We do not have a regulation as of now, but with the proposed guidelines, the draft guidelines are already there in the market. The second draft guidelines, we are expecting that in the couple of months, those guidelines will come into the picture as a regulation, new regulation for export and import. And then from there, we have to count maybe 6 months for banks to make the guidelines and 3 months more for that, so total 9 months. So roughly around we can take it that 1st of April 2026, new guidelines, new framework. And then banks have been given various delegations. So banks' internal guidelines and instructions are there. And these are what banks, what we call it AD banks. Now, in the revised scenario, we have to watch, because RBI has now said to all banks that you have to prepare your own guidelines within the larger framework. Everything has been almost dismantled. Major framework has been given. Very brief regulation is there, but banks have been asked that you get your board policy approved or your internal policy approved from your board of directors, and then you use it as a benchmark. So in my personal view, as of now, we have a uniform guideline. But tomorrow, when we deal with in the next year, maybe sometime in this month itself, there could be a guideline separately for Bank A, Bank B, Bank C, Bank D, and then Bank A would do something, Bank B would not allow that particular. So we are into some more issues getting created 1 year down. Maybe I have a chance to come back at least when the new guidelines. Then FEMA 99. So what exactly FEMA 99? FEMA, we have come from the Regulatory Act, which is FEMA. From there, we have come to Management Act. So, on a larger space, the regulation has gone. A management word has come. Now, management leads to an objective to facilitate trade. It is a facilitating that. If something on the road by going, I have just crossed a zebra line or maybe missed the red signal, there is nothing, I can pay penalty and come back. So it is there to promote the markets, promote the foreign exchange, and develop the trade and payments overall. So it's a facilitating tool. Now this extends to whole of India. So whole of India is anywhere in any mode we import that is there, any type of entity, maybe it's a government entity also, or individuals also, HUF also, societies, trust, etc. And then FEMA has given powers to RBI to issue notifications and regulations. Now, beyond RBI, we have authorized banks where RBI issues directions to conduct the foreign exchange business with a two-pronged angle. One is that how to conduct the business and how to implement the regulations. Now we have authorized dealers. So authorized dealers are our bank. Now everybody knows that we are using AD code on our export-import documents. So that authorized dealer is there. Now this power is not only to regulate. This is also to facilitate the external trade. So as a lineage of FEMA, we have next generation, which we can call in the lineage is RBI. And from RBI, this delegation has been given to authorized dealer that you facilitate trade and payment. not as a deterrent institution or not as a deterrent entity or only a regulated entity, but simultaneously there is an onus of doing the related compliances. So in my definition, authorized dealers is an extended arm of RBI. RBI does not open our account, or RBI does not handle our documents, or RBI will not facilitate our payments. So where do we go? We have to go to AD. AD Bank is an operating arm of RBI for execution of transactions, as also ensuring proper compliance. Whatever onus is there under the FEMA to RBI, AD has to comply. Now, Chapter 3, Section 10 very specifically says any person to be known as authorized person to deal in foreign exchange is authorized now. Authorized dealers are only banks as of now. Where we have AD2 category, AD3 category also. AD2 are money changers who can buy and sell currency or the smaller transactions, but not the trade or export import related transactions. And here each AD bank has been given an AD code by Reserve Bank of India, and that AD code we are using when you are generating a shipping bill or filing a foreign bill of entry. Let us have a look at the aspects of import covered under FEMA. What does Section 2 say? Import with its grammatical variations and cognate expressions means bringing into India goods or services. Now, this bringing into India is again there with that 7 nautical mile definition of the Indian territory. Once it comes into the 7 nautical mile, we will treat this as it has been imported. And maybe yesterday I was reading a judgment where it said that if the goods are not cross 7 nautical miles, we will not treat this as an export. So on the other side, import is when the goods come into those 7 nautical miles of the Indian territorial waters, then we treat it as an import of goods into India. Reserve Bank of India has various master directions, and one of the master directions is on import of goods and services. From 1916 onwards, they have stopped the issuing of this master circular, what they earlier called, on an annual basis, but this is updated from time to time. And the last instruction would have been issued under this circular on 29th August. So it is last updated up to 29th August 24. So this is one document, handy document should be there with everybody who's practicing import or export, whether from any of the angle, maybe from DGFT angle, from customs angle, from bank angle. Very first few lines of the master directions say import trade is regulated by Director General Foreign Trade under Ministry of Commerce and Industry, Ministry of Commerce, Government of India. Now, what exactly this means? This is that whenever you are talking of import of goods, the import trade related items or the commodity related things are all governed by DGFT. If something is permitted by DGFT, then only the transaction relating to money can be done. Otherwise, we are not into picture. RBI or FEMA does not come into picture if the transaction which is being done is under the approval or under the maybe approved list, we can call it, of DGFT. If it is not there, then FEMA does it. Another. Banks should ensure imports into India are in conformity with the foreign trade policy. So now this onus has also been given to banks that whenever you are handling a transaction, you should not only look from the FEMA current account transaction rules, that is the rules and regulations framed by RBI, but you also have to see whether the transaction is in conformity with the foreign trade policy. So now if it is a prohibited item, you cannot handle it. If it is a restricted item, whatever conditions, terms, maybe the advance authorization or licenses are there, they need to be seen and verified whether that a proper import is happening. Now, KYC is a big word. Each circular will have this KYC related things, and for me to talk to the maybe freight forwarders, etc., I am sure that you are also in turn ensuring the proper KYC of the importers, and it is not that fly-by-night operators may be there who could be doing something wrong, and maybe we being a part of a ecosystem on export and import get stuck somewhere. So KYC of an importer or KYC of an exporter is a must, not only from the banking point of view, but also from the point of view of each and every segment which is supporting those transactions. Banks may allow remitters for making payments for import into India after ensuring that all the requisite details are made available by the importer and the remittance is for bona fide trade transaction as per applicable. Now, the words bona fide trade transaction is slightly difficult, but still the banks have been given this onus to verify the details of the customer, verify the details of the supplier, verify the details of the transaction, and see that they do not seem to be out of the market transaction. So all this, even through the opening of the account in KYC. Now in trade, particularly export and import transaction, the KYC is not only related to the importer or exporter, which is our customer, the bank's customer, but it extends to a KYC of the supplier or the buyer, and it also extends to know your transaction. So transaction level KYC is required to be done for each of these things. Except for goods included in negative list which require license under the foreign trade policy, banks may freely open LC. Now this is relating to opening of LC and allowing remittances, but it says that wherever negative list or maybe a restrictive list is there, you should ask for the license or the authorization. When? At the time of either opening of LC or at the time of initiating. Now with this onus on banks, with this onus on all the regulatory authorities involved under FEMA or the different laws or under the FTP, the monitoring of imports is done. Why? Because a bank needs to, or RBI needs to know that whatever has been imported and what payments have been made, whether the imports have come into the country or not, or whatever imports have been made, whether the remittances. So somebody asked me a question the other day, why RBI is keen on asking if I have made an import, why should I make a remittance, or how does it matter to RBI whether I have sent the remittance or not? When I am importing something as a user here, I'm actually importing from another country. And as a country, as a nation, we have to safeguard our image. And to safeguard that image, there is a standard practice that if I am importing something on commercial terms, I must pay. If I am not paying, then there are ways and means to sort this out. For what reason I am not paying? So tomorrow the other countries or the suppliers in other countries may not maybe point out on India about some of the scrupulous importers who are importing the goods and not paying them. And if we look from the other side on the exports, this is our concern with some of the countries. Today morning, somebody only called that, sir, I expect somebody is asking me for a rice and saying that I'll pay once the goods received. How should I handle it? So these things are there. So that is why monitoring of imports will involve both the sides. Couple of things on the monitoring side where FEMA or the master direction is says. Under section 10 of FEMA, there is an obligation on the purchaser. If somebody has asked the bank to remit money for imports, then this money should be used for import only. So use foreign exchange for the purpose for which it is drawn or for any other purpose which is permitted. So I can also use this money for some other aspect which is permitted under the rules. Maybe I have sent remittance for import of chemical A. Now the other supplier says this chemical A as of now that good quality is not coming, but if you want I can supply chemical B. So I can ask my bank to substitute the order and get a chemical B, again the same $10,000 which I sent earlier. So substitution can be there. But as long as chemical B import is permitted under the foreign trade policy or any other rules. AD bank should ensure that importer furnishes evidence of import. Now, once the remittance is made, the system will track that the goods come into India and for which evidence of import in the form of bill of entry or any other document prescribed has to be filed with the AD bank. As long as we are sending remittance through the AD bank, evidence of import is required to be submitted. Import remittances outstanding on a notified date of IDPMS are uploaded. Now, whenever an outward remittance against import of goods is happening, bank is creating a new record or new reference number for that, which is called outward remittance memorandum. And this ORM reference is to be uploaded in the RBI software called IDPMS. We'll see how IDPMS is monitoring all these things. So ORM is mandatory for banks to create for all import-related transaction and then upload in the system. So what exactly we require now? We require one side bill of entry and another side ORM for monitoring purpose. This is normally a life cycle, or this is normally how the flow of bill of entry happens. Shipment received at Indian port, bill of entry is filed. Nowadays, maybe 48 hours or 72 hours prior to the touchdown of the ship, or maybe before the goods are offloaded. Then a bill of entry is filed and it is generated, so customs is approving that. Now, this bill of entry also has an AD code. My view is that bill of entry should not be filed without an AD code. In any case, bill of entry has to have an AD code. I'm not sure whether there is a mandatory that drop down or not, but AD code is a must there to be filed. Why this point has come up? Because very recently I have engaged with a corporate where they say, sir, in one of our cases, we have been suggested that you don't put AD code there, so your duplicacy can be avoided, but that was not a correct version. Now, this data from different ports and airports, courier terminals, etc., all moves to DG systems in Delhi of the customs department, and then that data relating to EDI ports is uploaded by DG systems in IDPMS, which is an RBI server. Now, basis the AD code we have, this data moves to respective AD banks. When we send the remittance, when the bills are handled, and we send the remittance either as an advance payment or against the payment relating to bill, an ORM is created, and banks are also uploading those ORMs into the system. These ORMs are used to knock off the bill of entry. If the bill is already presented there and the bill of entry is already submitted, if the bill of entry is not submitted, this will remain open as an advance and remain pending in the system. So this is how the monitoring happens. Now, taking this forward, the import shipments, how all import shipments get into the system. So we have EDI ports, maybe airports and seaports, where IceGate is used, and from IceGate the data is to be transmitted to IDPMS. We also have courier imports where courier bill of entries are there, and that is also now an EDI port, I think across some 15, 17 places now, where a separate software of customs, which is ECCI, Express Cargo Clearing System, is there, and from there the data also goes to IDPMS. We also have imports to customs, where customs assessment certificate and postal appraisal forms are there. As of now, this data does not go to IDPMS because postal terminals are still considered as non-EDI. Now, beyond this, we have a recent amendment or recent policy changes where Postal Import Regulation 2025 of 28th March has been brought into, where they say instead of that assessment certificate, etc., postal bill of import is to be filed at foreign post office. Now, customs automated system is there where Form 1 by postal authorities and Form 2 by importer or agent is required to be filed. So now this is slightly getting towards EDI port mode, and you may have one day when somebody will maybe press one button and this data gets integrated into either ECCS or IDP or IceGate. This is the rough view of how the flow chart has to be for IDPMS. This is the RBI server. On one side, the customs is there. Their data from IceGate and ECCS moves into the customs RBI server. Now, based on AD code, this data moves to AD banks to monitor. So now, if I use the AD code for the purpose of example only, say SBI, Then as this data will move to SBI, and then SBI has to take care of that bill of entry till it is closed, either by way of payment or write-off or whatever could be the reason. If it moves to HDFC, then HDFC becomes the owner. If it goes to ICICI, then ICICI becomes. So that bill of entry data is now in the what you call realm of the AD banks to monitor bill payments. Now, once the bills are lodged and the remittances are made, so this data will again go into the server and used to knock off the existing bill of entry if the bill of entry references have been given by the importer, or they will remain there as the pending. What exactly IDPMS monitors? We have got bill of entries, which comes through the customs. We have got ORMs, which comes through the banking cell. So we have entire data of bill of entry uploaded by customs and entire data of ORM, which have been uploaded by. Now, bill of entry and ORM become overdue after 6 months and 3 years in case of capital goods. So we have the data of regular bill of entry, where maybe if the payment is not sent up to 6 months, it is in the not only in the watch window, but beyond 6 months it goes into. And similarly, outward remittances, if the import has not happened, or if I have not gone and told the bank about the import bill of entry, then there is no problem. But beyond 6 months, somebody will knock at my door. I will be receiving reminders from the banks. Now, there are other instances where I have used the AD code of, say, bank A, and I have remitted the money through bank B, and then bank B does not know what is the details of the bill of entry. But I go and say that this is the copy of the bill of entry where the AD code of bank A has been used. So they will be able to do an AD transfer sort of thing, can be pulled. So they will put a request, bank B will put a request to bank A through the IDPMS software itself to pull that bill of entry and then match the details with the ORM pending with them and then close them. So this is just a transfer of bill of entry from one place to another place. Now, very importantly, bill of entry is to be closed by the bank which has created an ORM. It cannot be closed by a bank which has only an AD in the bill of entry. If I have not done the ORM, I will not be able to close the bill of entry. I have to submit that copy of the bill of entry to the bank which is handled by it. Then there are facilities relating to short payment or write-off of bill of entry. So that data is also now to be put in or punched in into the IDPMS software. And if the extension of bill of entry is to be taken beyond 6 months, then that also is to be tagged. So once I extend my bill of entry, I have not sent the remittance in 6 months. I have extended my bill of entry. Then in that case, that my due date for the bill of entry will be put back. Now, one important aspect. RBI, for RBI in the export segment, we have caution listing. But in import segment, we do not have a caution listing. So wherever ORM is pending or bill of entries are pending, where the imports, ORM pending and imports not made and bill of entry pending, payments not made or even not informed, it is possible that an importer has made payment from bank SBI. But when he has filed a bill of entry, he has used the AD code of HDFC. Two different banks. For an importer, the transaction is over. But until and unless that bill of entry copy is given to SBI and SBI pulls that bill of entry and closes that bill of entry and ORM, till then it is pending. And thousands of such bill of entries are there in the system as of now, where two different AD banks have been used. Maybe when I was dealing with SBI, I have used the AD code of SBI in bill of entry. But 8 months later, when I have made a remittance, I have made a remittance to some other bank. And because of that, both those entries. Now, RBI here what they have told the banks that if your importer customer is not cooperating in getting the bills closed or ORMs closed, not coming forward for extension or not giving a clarification why payment has not been made or why imports have not been made, then you may decide and report such defaulting importers to Enforcement Directorate for their action. Both sides, ORM pending. So now 6 months is the period. Maybe a bank will wait for 12 months and then decide on that. Bill of entry, the 6 months is a period. Banks may wait for 12 months and then send this data to ED. Who wants another regulator to come to our place? Nobody. So we have to take care of this. Even if, and it's a rightful way, we can use two different ADs in different transactions. Or maybe I can use an AD code of one AD, one bank, when I have imported goods, say for $1 lakh. And now $20,000 I have sent across in 5 tranches with 5 AD banks differently, and I can use 5 different AD banks. But ultimately, that 20,000 each of bill of entry will have to be closed by 5 different banks, and that is permitted. So we have to see what exactly we have done. At times, I have submitted the bill of entry to Bank A, and Bank A does not have an ORM for that requisite amount. So I think that the bill of entry is closed, and the bank, and only after 12 months, when I get a reminder, then only it will come to fore that this is still pending. Now, the IDPMS came into force from 1st December 2016. So we have data prior to 2016 and data post 2016. Now, prior to 2016, bill of entries were not pushed into the system. Maybe some of the bill of entries from 1st October 16 have been pushed from EDI ports, but largely they are not there. So pre-ED IDPMS, we have non-EDI port triplicate in an EDI port or quadruplicate in non-EDI port. Maybe the full levels, full scale side, green color on the top right-hand side, written exchange control copy quadruplicate in red, or in a computer generated on the right side, there marked triplicate exchange control copy. That original needs to be submitted now. And courier was not during 16 anytime EDI, so the original ones, maybe single, multiple imports were possible, that those originals are required to be given. And for postal bill of entry, definitely the assessment certificate, postal notices, etc. are required. Now, post IDPMS, what we consider is those entries which have come in the system or which are visible or which are monitored through the IDPMS. So even after 1/12/16, some of the ports were not live or EDI at that time. So maybe up to 2017, we may find some of the things which are not there in IDPMS, and more particularly courier imports. Because courier imports from 27th January 22 only they have started flowing, and even after that also a couple of months, because courier companies were not using AD codes at that in that intervening period of. And postal bill of entry as of now also originals are required. So they are post IDPMS, they are still non-EDI, and original documents are required. So I have a issue or a question here on the non-EDI ports or pre-IDPMS, where the original documents are not available. Can we retrieve or can we find out the source to retrieve copies or maybe a certified copies of bill of entries for such transactions through the customs? Because even in EDI ports, EDI port was not EDI in 16, but it was sometime in maybe early 2000s or so that the certain ports had started becoming EDI and IceGate had come into force. So from that data, can we support the system to generate or may get a copy of those old documents through their system, get a printout and validate it, maybe customs validates that, and then convince the banks to close the entries which are pending for large number of importers where originals, and in some of the cases we may also find that original was submitted to the bank and original has been misplaced by bank. So a big question there, maybe point to ponder, and maybe somebody can guide subsequently also on this. If something can be done, we will be glad to associate with some of the importers and get these things clear. Now, what exactly is required to match and close the entries in ID? So I require a bill of entry in IDPMS with correct details of all the import-related transactions which are filed by the agents or the importers with the customs, and that data goes into the IDPMS. And we also require the matching details on the ORM which are filed by the importer's bank, that is AD bank. Now, this data has to match. Once this data matches, then only bank will be able to knock off and do a manual process to knock off these things. What are the timelines and stages for filing of bill of entry and payments? So I've taken different scenarios, how in different scenarios, how different type of import bills from the FEMA or the banking perspective, this is. So the timelines for import of normal goods. Normal is what? Non-capital goods. 6 months from the date of payment. The timeline for submission of bill of entry for import of our normal commodities is 6 months from the date of payment. And for capital goods, it could be 3 years from the date. Now, if the import has taken place prior to the payment, then for making payment for normal goods, 6 months from the date of shipment, and for capital goods, it could be 3 years from the date. We have another aspect which we call it as a trade credit. If the bill of exchange is drawn ab initio beyond a period of 6 months, that is to be considered as a trade credit. Trade credit is a credit given by the supplier of goods in case of import, or a credit generated by the buyer or making payment to the supplier beyond 6 months. For normal goods, maximum 1 year period is allowed, and for capital goods, maximum 3 years period. So a supplier of, say, machinery can draw a bill of exchange where there is a bullet repayment after 3 years, maybe in the after 3 years, or he may generate 6 bill of entries, 6 bill of exchange for installment payments every 6 months. This is possible. This will have to be recorded separately in the with the RBI and a trade credit reference number generated for. Only where the bill of exchange or the invoice states credit period beyond 6 months. Trade credit registration is mandatory. Now, if there is an advance payment for import into India, payment has been made first, then only the supplies are going to come in. We have 6 months from the date of payment for submission of bill of entry. Now, wherever bills are received on collection or are under LC to a bank, then if it is a side bill, what the channel or the system would be that the importer makes the payment to the bank, then he gets the BL, the document to title to goods, and then he goes to the what you call agent to get it cleared. So normally it is 15 days from the date of payment. Side bill, once I get a BL, I will get it delivered. But maximum allowed is still 6 months from the date of payment. Normal period is 15 days. I will give the BL to CHA, he will get it cleared. So bill of entry should be generated in 5 days, 7 days, because ultimately I am more concerned about that period of 5 days, 7 days, which is allowed for me to hold the goods at port for the container detention charges. Now, if this is a usance bill, in usance bill, the importer gets the bill of lading or title to goods only by signing a bill of exchange. And when he signs the bill of exchange, he gets the BL and he can take the delivery of the goods to his agent. Here, the bill of entry is normally submitted by the importer to his bank within 6 months from the date of import, that is the import into India, bill of entry date, and but as and when he is going to make the remittance. So when it is a collection bill on 90 days and the due date for making payment is there, the importer will have to carry the bill of entry and submit the bill of entry copy to the bank along with the payment request. So this 6 months is the outer time. Now, wherever the import first and payment is made later, we have different types of document which we handle. Direct imports, where the documents are received directly by the importer. He has the title to goods. Maybe his importer's name is there in the consignee, or the BL has been endorsed in the favor of the importer. He can always take the delivery of the goods through his agent before making payment. The other could be collection bill through bank, where it is a usance bill. I merely sign a bill of exchange and get the title to goods, BL, and get the goods before making payment. Or it could be an LC bill, where it is also an usance LC. I have committed to bank that you debit my account after 90 days or 180 days as per the terms of LC. So BL is released by the bank before payment, and for all these three instances where payment is to be done later, I have to submit the copy of the bill of entry whenever I am sending the remittance on the due date, after the due date, before. So bill of entry is to be submitted to the bank at the time of payment. Now, here clear instructions are there from RBI side also that even when you are handling the direct import payment, do not make the payment without verifying the details of bill of entry in IDPMS. So copy of bill of entry is mandatory to be submitted. Very exceptional, without bill of entry copy, bank will make a remittance for direct import, but largely it is important and it is asked. Where payment is made first and import is at a later date, the shipment will be made after the what we call the payment, or after even the goods have come in, but it will be released later once the payment. So I do not have the document to title. So advance payment for import, payment goes first, then the shipment comes. In case of side bill also, I make the payment to the bank and then get the title goods or the BL, and then go to the agent for getting the goods cleared. And similar is case in the side LC also. Now, in all these three cases, bill of entry is to be submitted after release of goods from customs, but the maximum period is 6 months from the date. Maximum is 6 months. Now, in case of capital goods, I have 3 years. If advance payment is made, physical imports into India within 3 years from the date of payment, I have to submit the bill of entry. And if the import has taken place first, in case of side bill, then I should submit the bill of entry within 15 days. Now, in case it is a usance bill, then again at the time of making payment, but still the 3 years condition will be kept. Now, let us talk about delays in filing or delays in remittance. AD can allow payment for imports, normal goods, 3 years from the date of shipment with interest for delay. If the contract says that if there's a delay is there, then as per contract, certain interest is to be paid. Then along with interest, this payment can be handled by the bank up to 3 years from the date of shipment. And if the payment for import goes beyond 3 years of the shipment and interest is not there, there is no interest to be paid, then beyond 3 years also banks are considering such payment. Now, wherever interest is there beyond 3 years, we have to go to RBI for. So with interest up to 3 years, bank can pay. With interest after 3 years, you have to go to RBI for. But without interest, even beyond 3 years, banks have been at certain places asked, or they have been advised that you can consider it. I know of some of the banks which are restricted up to 3 years. There are certain banks which take a call and do it up to 5 years or beyond that. Now, for submission of bill of entry, if it is delayed beyond 6 months, I have made an import payment, but my import has not taken place. The supplier has not yet shipped the goods. I'll have to extend it. So I have to go to the bank and say, you have to extend my import submission bill of entry because the goods have not been. This is the two-way communication with the buyer or the supplier. And then according to that, I have to get it extended by the AD and marked in IDPMS. In case of gems and jewelry, various segments are there, not going into much detail, but for semi-precious, there is different 190 plus 90 plus 90. Beyond 180 days, you have to go to RBI. In case of gold, beyond 90 days, you have to go to RBI. In case of gold and silver from IIFCA, if gift city somebody is permitting, then 11 days you get. Otherwise, no advance payment for gold. All different guidelines are there. So not going too deep into it and explain it. Short values are write-off. ADs have been given a power that up to 5% of invoice value you can write off where because of operational reasons there is a mismatch or the value does not match with the value of the bill of entry. Now here I have sent $1,000 and maybe in between some $50 have been deducted or $40 have been deducted by intermediary banks. So the beneficiary has received only $960. So he is making a shipment of $960 only. I know the technical reason, operational reasons. Or I have received the goods, but because of certain charges related issue, I am now sending only $950 or $960 against a $1,000 invoice, bank will consider it. Not beyond 5% write-off is permitted, and this adjustment can be done both in the ORM as well as in the bill of entry. Now, beyond which, full value write-off is only permissible where there is a dispute with the supplier on quality issues, short shipment, destruction of goods by owned by customs, sales authorities, etc. Only against quality issues or such specific items, the write-off up to full value is there. Other than quality issues, if there is any other issue, I don't want to make a payment, I want to adjust it somewhere else, or maybe there is a breach of contract, etc. If I am not able to prove to the bank about the quality and other cases, our bank will not consider write-off. If you go to RBI also, very rarely such write-offs are approved. We have cases where we have done certain things with the approval of the bank and approval of RBI also, but write-off has to be necessarily based on quality issues or the restrictions by customs service. Transaction between DET and SEZ. Now, DET and SEZ is outside the country, but for all practical purposes, it is within the land. For customs angle, it is outside the country. So I have created certain scenarios where we have SEZ to another SEZ unit. Within the same SEZ, it is intra-SEZ. It is sale for one and purchase for another. So now if my company has sold goods, what exactly I will get? So today only I got a call from a large bank saying, sir, there is no bill of entry, how to handle it. So we have an intra-SEZ transfer, which is generated through SEZ system, SEZ online. The invoice is also stamped and verified by customs. So those are the documents. I don't have a bill of entry. Now, what necessary is there that if the goods are moving from unit A to unit B in same SEZ, maybe Noida SEZ or Moradabad SEZ or Jaipur SEZ, then it is intra-SEZ and it has to be done. Now, another aspect is SEZ to another SEZ in another SEZ. So, inter-SEZ. One sale for one, purchase for another. The goods are going out of one territory and going into another territory. Now, this is as good as import and export. So, for my unit, which is selling the goods, it is an export of goods, so it will be a shipping bill. The unit which is buying the goods, for him, it will be necessary to file a bill of entry. Maybe the SEZ at most of the SEZs now, it is mandatory that you have to file through IceGate, but SEZ online has not been dismantled with as of now, as per my information, and there are glitches in filing through IceGate also in various issues. So those things apart, but bill of entry will have to be there, generated to system, and this data should flow in IDPMS through either SEZ online or through IceGate. The other is then the normal import from foreign supplier. So I have to key in the data in SEZ online, and as per the current regulations, I also have to file my bill of entry in IceGate. So there will be a bill of entry which has to flow in IDPMS, and then ORM can be made there. SEZ purchase from DTA. So when in DTA sales to SEZ, we sell exports by DTA. So it is import by SEZ now. So if my client is in SEZ, it is an import from DTA, for which I have to file a bill of entry in SEZ through SEZ online or IceGate. Now, there is a provision, I think Rule 30 or so, when an exporter can supply the goods to SEZ without a maybe shipping bill, without taking the benefit. But I am not sure whether such a provision is there for import into or import by SEZ. For SEZ, bill of entry is required to be filed in all cases. Then we have SEZ sales to DTA. Now SEZ is supplier, so exports by SEZ and imports by DTA. So DTA in normal course, whatever imports or whatever purchases are being made by DTA, they will have to file a bill of entry, and that bill of entry is as good as a normal bill of entry which is required to be filed. So duties, etc., will be applicable as for normal. SEZ unit job work from another SEZ unit. So now I am exporting goods for value addition and then bringing back. That scenario we have to see. As good as sale and repurchase with value addition. So when I am supplying the goods, I have to file a document in SEZ online. And when I am bringing the goods back, I have to file a bill of entry. So here also, the SEZ Commissioner's approval and movement of goods related document and bill of export and bill of entry both will have. Now, what precaution is required to be taken here? When the goods are coming back and I am filing a bill of entry of those goods which have come back, I have to see that this bill of entry includes the references relating to bill of export, number one, and also the values. I have sent goods for $100. Now the other party added a value of $20. So when I'm filing a bill of export, it is $100. But when a bill of entry is filed, it is 120 and not only 20. I have a case where imports from abroad, bill of entries got accumulated, and the SEZ unit was filing the bill of export only for the value addition of $20. And when the bill of entries were required to be set off, we did not have balances in bill of export, and God knows how ultimately they did it, because there was a case and a notice from the bank and the regulator. Lastly, SEZ unit supply for job work to DTA unit. Now, SEZ unit is supplying the goods, so they will file a bill of export. DTA unit is importing goods, maybe for re-export purpose, but they will file a bill of entry. And when they re-export it back to SEZ unit, again SEZ unit will have to file an import bill of entry. The value additions, etc., need to be taken care of both ends, SEZ importer and DTA importer in part one, and DTA exporter and SEZ importer in part. Now, taking this forward, we will now delve with certain caselets where maybe the certain issues or challenges are thrown when we are filing bill of entry. So on those aspects of bill of entries where we can take precaution and see that error does not happen. First and foremost is IC. Correct IC is a must for that. I do not know how wrong IC can be filed, because we have seen cases where an importer says, "Sir, मेरा IC है ही नहीं, मेरे account में IC आ रहा है, मेरे account में bill of entry pending आ रही है. I have not imported anything." I'm not sure how this happens, but first and foremost, I thought that I should bring it. Now, so what we need is a correct IC of that correct importer. Now, if a wrong IC is there, I can think over that all other things related to importer may go wrong. So that needs to be taken care of. Now, wherever group companies are there, then different ICs or group companies will be there. So maybe if there are two imports of a same group, one group but two different companies, we saw a case where the ICs got jumbled, A ka B and B ka A. So, and the remittances were made through the bank on the respective correct IDs. Accounting was correct, but the IC got jumbled. So we had to maybe fight it out with the RBI and got that get there. Then branch of an IC. Now a single IC is there, but they have got multiple units, and those units are dealing separately with different AD banks. Now, if I am using the correct AD bank, but not using the correct maybe the branch of that IC, then also it could be difficulty in getting those adjusted, because ultimately I have to transfer it from one place to another. And very classic scenario where a single IC has got DTA and SEZ 2 units. Now, for all practical purposes, a unit in SEZ, for all purposes, it is a different unit altogether, because we treat it as outside the country for customs purposes. So I have to demark it and use it in a proper way. SEZ imported goods, same IC was there, but AD code was used for DTA. Something amiss was there. I have to see correct AD code, and we suggest to bankers also have different accounts, have different EFCA special accounts also, so that there is no jumping. Maybe I would go and tell the corporates also have two different banks if required, so that there is no miss out here. Now, AD code, correct AD code is required. Now, what issues could be there? Corporate having multiple banking arrangements. Now, if multiple banking arrangements is there, unit 1 is using ADA, unit B is using ADB, unit C is using AD3, or maybe a combined thing, different units, but one at the corporate level, and the entries are flowing from one place to another place. We have an example of a corporate which has more than 2,500 or maybe roughly around 3,000 bill of entries pending in the system because of this issue, and some other relating to SEZ data also. Entries flowing to wrong AD. Now, if I use a wrong AD, maybe instead of A, I use a B, the bill of entry will flow to B. A does not know. A is holding only ORM. So again, issues are there. And another last question is there whether I can file a bill of entry without AD. Now I know of a system in SEZ online that was possible that without AD code, I have seen physical copies where AD code is not there. But whether IceGate permits it or ECCS permits it, no, in my opinion now. So if this facility is there, then we have to be on a more take more guard in ensuring that without AD code we should not file. Transaction details, seller, consignee, same seller, maybe the seller, consignee are same or different. If it is a third party, then I should see that the different names are there. So we have an example where the seller was mentioned as a consignee and consignee was mentioned as a seller and the bill of entry got through. So the details relating to invoice number, description, port of origin, etc., HSN code, everything has to be okay. When the bank checks it, then they should not find anything irregular there, and then they may not be agreeable, or they may ask us to go to customs and get this corrected, which is not largely possible in any of the scenarios once the bill of entry is pushed to the ICE gate. And then correct input. CIF, FOB, freight insurance separately mentioned in invoice should be correctly mentioned. Now we go back to slide 1. This has an impact on the contract. It starts from the contract and then it comes to invoice and then it comes to bill of entry. So education or learning for the importer is from day one, it is mandatory, necessary. Now the invoice said $1,000 and below it was mentioned $100 freight and $50 insurance. So $1,000 plus $150, 1150. Now a filing was done in total value of $1,000 and 150 were mentioned separately. So FOB instead of 1,000, it looked like 850. Error in filing. Or the total invoice was 1150, where this was to be mentioned, but in FOB wrongly 1150 was mentioned. So now the CIF value became 1300. So some error here or there, it has to be correctly picked up and correctly saved. All imports are valued at CIF basis for the purpose of duty. So even if it is an FOB, I have to mention the actual freight and insurance in that particular case. Value of import, I think in case of insurance and freight, when the freight is there, when the goods are coming through air, there is also certain additional conditions need to be followed because freight at times may be too high on actual terms. So there is a capping or ceiling there. Not exactly sure about that provision. Value of imports. Now, the value of imports, when we put it, then the currency is there. Now, when a wrong currency is chosen, the wrong rate is also chosen. So it will also impact my rupee valuation. And the correct FOB and CIF input, if it is not there, then also it will impact my total valuation on CIF basis. So one is currency. So we have had cases where a dollar invoice, which was given to us by the importer, and the bill of entry was in euro. Now the rate is what? 84 and 96, or maybe 100 rupees. So the difference of 16 rupees is has impacted the rupee value there. And then maybe on the 16 rupees, the guy would have paid additional duty if this error could have been avoided. And also the payment terms. Now the payment terms is, it could be DP, usance, advance, the commercial payment terms, or it could be FOC. Now, FOC is for samples where commercial value is not involved. Samples could be of two types. One is a paid sample. The other guy says, I'll send you sample for $500, but I need payment. And someone says that I'll send you a sample for $5, but I don't need payment. So free commercial sample is another one aspect where foreign exchange is not involved and FOC samples are there, which needs to be punched in the bill of entry very correct. Now, in sample cases, sample with commercial value and sample with no commercial. Sample with no commercial value, large number of bill of entries are there in system where FOC is not written on the bill of entry, and because of that, entries as small as $1 to $5, hundreds and thousands. Even I would have a reservoir or a maybe bucket of 5,000-6,000 bill of entries pending with me with all the clients who have approached me to get this closed. So maybe I will get in touch with Dr. Sun or somebody else later on to find out a solution for such a things to get this data drag on the system taken down. For customs, nothing is free. Even for a $1 import, which is FOC, they will levy duty. So I have to, for when I am paying a duty, I should not think it that it's a commercial value. If it is a non-commercial, take a proper declaration from the importer and take it from that drop-down FOC. Filing of bond bill of entry when the goods are stored in bond. So correct details as per invoice IC. Only the import duty impact is not there. Everything else to be same. And such bill of entries when are also required to have that AD code there, and this will also flow into the IDPMS or the respective AD. And then the X bond one. Once the goods are released. So when I'm paying the duty, now what could happen? One bond bill of entry, multiple X bond bill of entry. Okay, so this is one. Now I have to file this X bond bill of entry with all the correct details and also the reference of the bond bill of entry. And there could be multiple also. So this also will go to the AD bank, and then AD has to understand and get this because there's one transaction, the link transaction, one of them will be closed with ORM. Ideally, the X bond should be closed with the ORM because X bond only means that the goods have come into DTA. Bond does not mean that the goods have come to DTA. But we have banks also, we have corporates also who have sent remittances against X bond bill of entry, and X bond bill of entries are pending. So we have to take care of that. Filing of SEZ bill of entry. Correct details of transaction as per invoice. Correct IC if separate unit. IC for company and having DT and SEZ units if separate are there. And then correct AD code. If there are two different banks, I must ensure that I am using only SEZ AD bank because normally somebody will recall or whose company का ये AD code है, but the SEZ unit has a different AD code. So I have to see that. Then movement of goods between bond in DTA and SEZ. Goods parked in DTA in bond at the port first, and then they have moved to SEZ. So here also that link reference number is required when we are filing in the SEZ. So and the correct AD code at both places. Now both these bill of entries should flow in the IDPMS, and bank has to take care to close one of the bill of entry on the basis of the another one, and the X bond bill of entry or the SEZ bill of entry on the basis of your OR. Couple of more to go. Third party. Different supplier and different consignor. Now here when the data got punched, there was jumbling in pages, so incorrect details were there. Or the consignor was different, but on both places supplier's name was given. So it did not match with what the BL had or what the invoice had. And there is a provision that payment will be made to. So our supplier is the party with whom we have a contract. So the payment is to be made to the supplier. So exactly that needs to be mentioned there. In merchant trade transaction, the party who makes the payment is different than the party who gets the goods released. So HSS buyer releases the goods. So bill of entry is in his IC and AD code. So HSS supplier or seller is another party who makes the remittance. But however, his details are also mentioned in the bill of entry because there is an HSS agreement. Now, in some case, even though HSS agreement was there, the proper details of HSS seller were missed. So we have to take care of that. And amount and other details are exactly as per import invoice, not the HSS invoice, because ultimately imports are into the country are based on the import invoice and import document. Now here this bill of entry copy is required to be provided by HSS buyer to HSS seller so that HSS seller can provide to his bank which has created an ORM and close it. HSS buyer by himself will not be able to close the ORM or bill of entry in the system through the bank. Re-import of goods exported earlier or import for repair and re-import. Now, whenever goods are exported, there is a shipping bill generated, and if they are imported for repairs, re-imported back for any purposes, maybe rejected or anything, then that shipping bill number should be mentioned in the bill of entry. And the correct purpose, whether it has been returned or a rejected goods, or whether the import is there where I am going to re-export again after repair, etc. Return of goods exported on consignment. So we have a consignment export concept where the goods are not sold at the initial phase, but they have been sent on approval basis. Now, in approval basis, also maybe 50% goods have been bought. So 50% goods come back. I have a shipping bill for $1,000, $500. I have a bill of entry. When I am filing a bill of entry, I must mention the details of the shipping bill, which is on the consignment basis. Wherever commission discounts are there, even if we are purchasing, the commission discount is a larger issue on the export side, but even in import, sometimes commission discounts are there. We must mention whatever is there and file the bill of entry accordingly. Return of goods exported on consignment basis. So this, I think we have covered in the previous point itself. But whenever the consignment re-imports are there, that correct details should be there and export shipping details should be filed correctly. Major issues now where I would like to have suggestions from the forum also. Retrieval of copy of bill of entry in case of need, EDI port or non-EDI port. How far it is possible? Maybe I know that corrections are not possible. We have certain sections where corrections have been permitted only on the basis of the original documents which were filed, but corrections are not permitted basis the error, etc. So how do we go about it? This is the other part of that which I have those questions with me to solve several of the questions in the system. So, and there could be n number of other issues with you also. With I think I'll be able to get some of them in the chat or the question answer. But if you have subsequently, you can always throw it to me. Let us discuss and see that how well we can manage the things. Now, what we are thinking of. We have in the previous year, our imports have crossed 720 billion. Previous year, it was 678 billion. We are talking of exports from 437 billion to maybe 800 or 1000 billion by 2030. If 437 to 800 billion is the target for exports, aren't our imports going to increase and go beyond 800? 800 is too near now. 26, 27, only 800 will be there. 30 will be there at around 1100, 1200. When our exports will be at 800, our import will be around 1100, 1200. So there is a need to maybe educate people, not only our own teams. Very rightly in the beginning itself, it was said that we have various sessions for newcomers, etc. And I was sitting with a CHA very recently in the last week to understand some of the nitty-gritties of import shipment. He said, still our own people are trained. It is bound that there will be errors. So we need to train people and we need to understand the nitty-gritties. So we started with the starting point. Starting point was contract, order, and pro forma. And we end this point that right from that point, we need to share the knowledge with our import clients to avoid compliance risk at a later date. And they're coming back to you because ultimately when they come back to you with their issues, they're eating out your time. So that needs to be changed. So we will have the questions posted in the session. Thank you very much. Keep learning as a passion. These are my credentials. Details are there if anybody wishes to get in touch with me. Subsequently, also, you are most welcome. Thank you. Thank you very much. Thank you, Dr. Sant. Thank you, Dushyant Bhai and Triple FAI for this opportunity to engage with the audience. Thank you. Thank you, sir.
Thank you, Michael. I think it was amazing, really, that all the type of problem under the sun you have listed down. It's great, yeah. So absolutely fantastic. Definitely, I mean, we will have new and new cases which will keep on coming. But I think you have really covered everything from the scratch, really, right from the really where the error can happen. Great thing. Thank you, Gaurang. Yeah. Sudeepji, Sambashida Rao, you have something to say before we go to Q&A?
Yeah, nothing, sir. But okay. This is a good session because being in the industry for the last 43 years, dealing with the customs, Gaurav Sab, Gurang Sab, we have taken a good presentation. We are so happy because people like you, experts, I think once in 3 months, you must address all the students. It will be good. And people like us, we are always a student because learning is everyday process, what we believe, maybe in the industry. But somebody asks what we know 50% in the shipping industry. So like that, we also want to learn and every day by people like you are the experts in the domain, then I'll be so happy, sir. Thanks for sharing your knowledge to all of us. Thank you, sir.
Thank you. Yeah. Dr. Neerav, you want to take Q&A from chat?
Sir, you can proceed.
Okay. Yeah. So Sudipji, I will start Q&A and then I will hand it over back to you.
Yes,
Yeah?
please. Yes, please.
Yeah. So, I mean, we have many questions. Let's say that we will take some of them. Maybe it will be very difficult to do all the questions. Yeah. We send goods to outside country with GR waiver from bank. The re-imported goods can come after few days, and we submit the letter along with in mentioning bill of entry. Bank has closed the GR waiver, and we face the issue of IDPMS for making the payment of repair charges. How to resolve the issue? Yeah, you want me to repeat or it's okay? It's the first into the chat, second into the chat. Bye.
So, sir, for GR waiver, once for export of any item, GR waiver is there. There are two ways to close that GR waiver monitoring by the individual banks. As of now, that GR waiver does not go into IDPMS or ADPMS, but GR waiver is necessary for exporting certain goods. And when those GR waiver is there, either if I have sent some item for repair and re-import, I have exported some maybe part of a machinery for repairs and re-import. At the time of re-import, I will, at the time of export or at the time of sending the goods, I can get a GR waiver. But at the time of re-import, I have to file a bill of entry. And in that, I must mention the GR waiver references. And this bill of entry then is used to close the GR waiver with the bank and IDPMS also in the bank. So if any entry is pending with the bank in the IDPMS where such re-import has taken place after repairs, then this needs to be closed with the respective GR waiver. The payment is not going to go there because GR waiver is what? Export leg. And without expectation of payment, and the bill of entry can be closed with the export.
Yeah. Gauravji, in the bill of entry, the material which is come, only I have to pay the repair charges. So I have to
Yes, sir.
mention the repair charges separately.
Hmm.
Is that then it will appear in the IDPMS or how it will be?
So, sir, what has happened? Suppose I have sent an item for $1,000 for repair.
Yeah.
And when it comes back, the value becomes 1,000 plus $100 for repairs. So it becomes 1,000 plus 100. So the invoice should mention clearly $1,000 return of goods and $100 repair of item. So $1,100 ultimately that becomes the item when we import into India. So $1,000 is knocked off against GR waiver and $100 remittance is permitted.
Great.
So
Perfect.
ORM for $100.
Yeah. So I think very clear. Thank you. Yeah. Discount allowed by supplier after clearance, remitting lesser amount from invoice. How to close bill of entry in IDPMS? Discount allowed by supplier after clearance.
So if that discount is within 5%, then there is no issue.
Okay.
But if it is more than 5%, so up to 5%, we can go and explain to the bank because of any XYZ reason, I have only remitted. One thing is to be taken care that debit note and credit note is not an authorized or an approved manner to adjust the payments in both export and import. So we should not use the word debit note or credit note. It is only correspondence which does not have a heading as a debit note, credit note can be used. Now, up to 5%, I don't see any problem. Banks normally consider this item, but beyond 5%, there is an issue. Now, for what reason discount is there? Maybe if the reason is there where a write-off is possible, I can take a route of write-off. If a write-off is not possible, then I may have to go to RBI for approval.
Yeah, perfect. Thank you. When we have to file bill of entry under FOC basis, in the payment terms, we choose free of charge, but still bill of entry shows in the pending list of bank. How can this be resolved?
So, so customs, there is nothing FOC. Customs, every penny what you import, customs will levy a duty. It is only a payment method that FOC is there. So because that FOC is not considered, not maybe not in the list of customs, the bill of entry will flow with the bank. A copy of the bill of entry where FOC is written can be given to the bank, explaining that this is free. It should be mentioned in the invoice and it should be mentioned in the bill of entry, and that it can be taken to bank for closure. And banks are doing it, sir.
Yeah.
The
And
only issue is there. The only issue is there where the invoice does not mention. Now, the exporter, for him, there is no FOC word. We only want it. So we go back to slide 1, contract, pro forma invoice. There we need to talk to the supplier by if you are sending a sample free of cost, please write free of cost, no foreign exchange involved, no commercial value, so that I can translate it into bill of entry and then I can also ask the bank to.
perfect. And then the correspondence for free of charge also helps bank to really substantiate that.
Yes, sir. But bill of entry entry is
Must to show.
mandatory. If it is not in bill of entry, bank may review.
Will not allow that. Correct. Perfect. Yeah. What is the GR waiver limit? How much time we will have after issuing the GR waiver for return of goods after inspection?
But normally, maybe 6 months for the import, 6 months for the export, or not. Some of the banks track the GR waiver for 90 days also, beyond 90 days also. So if I have sent goods on for repair, and there I have written that this will take 90 days because the bank will ask us what is the timeline for that. So our bank will put a due date of 90 days only. So largely banks track GR waiver for 90 days. If it is beyond 90 days, then I need to explain that what is the timeline. I can always give my extension letter to the bank basis my correspondence with the supplier or the repairer.
Okay. Yeah. IDPMS bill of entry cases where retention hold back payment is 8 to 10% holding back by the importer and not paying to suppliers due to failure of contractual obligation. How to close IDPMS entry in the scenario? Currently 5% invoice can be closed, but if outstanding is above 5%, how to close IDPMS entry in absence of supplier, no due certificate in place?
So, sir, this retention holding is normally 8 to 10%, which we can consider it as a quality issue. That out of maybe 10,000 kg, 5% of the commodity or 8% of the commodity is of not a good quality, and because of that, that retention is there. I would see that if we can convert this into a quality issue, and then maybe send lesser remittance, or if this is a regular feature in a particular industry, we can always go to RBI and have it approved.
Great. I think that's perfect. It has been observed that FOC, free of cost shipments details, includes the bill of entry, are also being transmitted to RBI IDPMS as these shipments do not have corresponding ORM, outward remittance. We seek your guidance on appropriate process to close the IDPMS entry. I think we have covered that, no?
Yes.
Or you want?
FOC, take a copy of FOC bill of entry, take a copy of the invoice and give it to the bank, explaining to them on a letter that this is a free of cost sample as agreed by between the buyer seller, and bank should consider to close it. If bill of entry has an word FOC, then bank should not have a problem. If it is not there, then banks may not do it.
Yeah. Amended bill of entry data does not flow to IDPMS, leading to challenges in foreign remittance. Request you to advise the possible solution to execute the remittance and knock off the IDPMS entry. Bill of entry amendment. So there is a addition
Yes.
of.
So once the bill of entry is like an arrow going out of the bow. So once a bill of entry goes out of the bow of customs in IDPMS, it cannot be corrected, it cannot be pulled back. But the alternate is that when we file an amendment with customs and customs has agreed to that, take out a print of the bill of entry, get those corrections manually done, and then the customs may certify that these corrections. Now, when we file a amendment, there is a process of filing maybe paying 1,000 rupees amendment fees, and then maybe the customs will approve it. Either I give a letter, they give a letter. Some of those documents, and then I can go to bank and tell them that these the corrections are made, and on the basis of these corrections, the remittance can be sent or the bill of entry can be.
Correct. Absolutely. Yeah. My customer courier company DHL do not mention FOC or term of free of charge, due to which there are many bill of entry pending in IDPMS. What is the solution? Bank asks for revised bill of entry. I know. I mean, with courier, it will be more difficult on
Courier is more difficult because courier companies will not handle our cases beyond 90 days, number one. Number two is that once it is filed, they are out of the picture, so they don't take up our assignments subsequent to that for particular thing. The only thing is that if I have maybe some recourse which I had posed during the presentation also, that whether do we have a recourse that directly we can approach customs or we can get this amendment on a manual thing. If it is mentioned in invoice at the time of filing, then maybe a manual correction on a copy of a bill of entry is possible with the customs. But if the invoice does not mention FOC, then it is difficult to do it. Maybe we have to find out some other ways to get this adjusted here or there. Otherwise, not possible.
Not possible. Okay. Now, okay, this is very interesting. For advance payment, material like spare part is received after 6 months. Whether this transaction will fall under capex or normal import of goods. So
it is normal import of goods, sir. Capex will be entire machinery, but spare parts cannot be considered as capex. So if it takes beyond 6 months, maybe base your contract, maybe your contract itself says shipment will be done after 7 months. Bank has to understand and extend it accordingly after 6 months. No issue in that.
Yeah, but one more question is that how the capex bill of entry you will file, it may be equipment. How it will come to know whether it is capex or a normal machine or a normal item?
From the commodity or from the description of the goods, the payment terms, etc. Because in machinery there could be a payment term where they said every quarter some installment is to be paid, or maybe it could be a 3-year bullet repayment. We have seen capex import where there were promissory notes were signed by the importer in India, which were payable every 6 months. So the foreign bank used to send promissory notes to the Indian bank every 6 months to pay. So based on the entire set of documents and your agreement, it can be decided whether it is a capital good or it is a normal goods.
Yeah, because from bill of entry, it will be difficult unless he writes the description as a capital goods. Yeah.
Not from bill of entry.
Yeah, not from bill of entry. Yeah. Then there is a question really, because we are Chennai-based importer of pearls. We imported and sold our material on high seas sales basis to our buyer while in transit, who is one-time buyer, and while filing the bill of entry, that buyer's CHA declared the buyer's AD code, not instead of our AD code in bill of entry. After we submitted import documents like import invoice, bill of lading, contract between buyer and us, high seas sale invoice, etc., their AD code number is not reflecting in the bill of entry. Our bankers are not accepting the document and refuse to make our toward remittance to our buyer. Now ORM is showing pending as IDPMS. In this situation, there are other alternatives to close the IDPMS. Yeah.
Sir, bill of entry, one or the other AD code will have to be used, either HSS buyer or HSS seller. Ideally, it is HSS buyer whose AD code is used because he is filing the bill of entry for release of goods. Now, even if the AD code of HSS buyer is there, the HSS sellers or the actual importer who has created ORM, his bank can, on the basis of the copy of the bill of entry, verify the details, pull the bill of entry from HSS buyer's bank, and then close the ORM.
So that should not be really problem.
It should not be a problem, I think.
It should not be a problem.
Maybe the question is not clear whether the AD code is mentioned or not mentioned. I think at one page he has said it is with the AD code of HSS buyer, and then at the other page he says the AD code is not there. So if AD code is not there, then again it's an issue. The entry will not flow in IDPMS, and then you have to go back to customs and get that AD done, and then refiling has to be done accordingly. Without that, it will not be possible.
Okay. Then we will take the last 1 or 2 questions, because I think we have really exceeded the time. So the value of imported good was CIF the imported cargo was on re-export basis. The value of imported good was CIF, which was split into FOB, freight, and insurance in the invoice. Accordingly, filed the bill of entry. After completing the usage, we approached the bank for GR waiver for re-exportation. However, the bank informed us that they can issue GR waiver only for FOB value, as the value reflecting in IDPMS is of FOB amount. As per custom regulation, the value of re-export cargo should be of CIF value.
There seems to some error at the time of filing. If the filing is incorrect, then the only modus is to get that bill of entry corrected on a manual way. If it was wrongly filed, maybe insurance and freight have been missed out somewhere, and the IDPMS does not have the value of freight and insurance. We have to get it manually corrected and then escalate to the bank to issue a proper GR waiver for the full value.
Yeah, and I think this one question keep on coming is there value limit under FOC?
Ideally, no, sir.
Ideally, no.
Ideally, no.
Yeah. Can we settle the payment in INR in India for imports done from overseas?
Sorry, sir. Just missed.
Sorry. Can we settle the payment in INR in India for imports done from overseas? No chance.
Payment in India is not permitted on both sides, exports and imports. Only payment in rupee is possible through SRVA account or the Vostro account or Nepal, Bhutan for import. Otherwise, not. So paying to a DTA is not permitted for import. That requires RBI approval for that, because ORM will not be created.
Correct.
Only on those channels where ORM is created, we can make payment for it.
Yeah. So I think that also said it is the same. Can we settle the shipping line payment in USD in India through EEFC account?
It is permitted, specifically permitted to shipping companies and shipping lines to remit to collect the money and then remit to the principals, etc. That separate provisions are applicable there.
Okay. I think there are few more questions which I will send you by email.
Yes, sir.
To get the time, please return.
Definitely we'll respond. We'll respond to those.
I think we have really exceeded time and it's critical to close on time. So, Dr. Neerav and Sudeep Day ji, hand it over to you if your comments and any specific issue and word of thanks. Yeah.
No, sir, there's no use stretching it any further. We've all spoken. And the only thing which I would like to tell the audience and tell our esteemed speaker today, Mr. Vasavada, that we as a federation, we are very much we are pushing education and we are pushing training and to the highest degree under the direction of our chairman, sir, because it is custom broking and the allied services that we do. We are primarily custom brokers and then we do the allied services. So it has changed over the last 5, 6, 7 years, and it is changing drastically. And so training and upgrading ourselves is very necessary. And so, because unless we conduct such sessions, and which speakers like you all so kindly do for us, we are not able to actually answer to our members, because unless they come up with so many questions, come with so many problems. So unless we do this at regular intervals, it is not possible for us to answer all their questions, because we at a federation, we are all giving voluntary services. After this webinar, we go back to our own businesses and we do our jobs. So we are really thankful for speakers to you all who actually do this. And I would like to tell the audience also that kindly attend the same and kindly keep in touch with the federation. We are very much aware of what the changes are coming, and that is why we keep organizing these. I would also like to tell the federation that we have a convention coming up on the 29th, 31st of May this year, just barely 1 month away, and it is at Goa. So in the convention, we will show you which direction we are moving, what is the world thinking, and what is the probable scenario which we are expected to see in the next 1.5 or 2 years, because this is a biennial convention. So we take a vision of 2 years and we tell our members. So it is a must attend for anyone in the logistics sector. And anyone can visit our website fai.org, and you can register yourself for the convention. And please keep attending our webinars. It is only for you. There's no other benefit to the Federation at all. It is only for your education, your upgrading of your skills and knowledge that we do this. So having said that, I would request Dr. Nirav to propose a formal vote of thanks. Thank you very much, Mr. Vasavada, sir.
Thank you. Thank you, Sudeep ji. I think you've summed it up very well, and it's on behalf of Triple FAI, I would like to express our deepest gratitude to Mr. Gaurang Vasavada for this wonderful, insightful webinar on foreign exchange management, which was relating to the imports processes and its implications to our trade and the freight forwarders community. And you've shared all your valuable knowledge, experience, practical perspectives, how FERA moved to FEMA, and especially with inclusion of compliance or obligations. You highlighted about various upcoming guidelines as well, which will be directly impacting our operations. And I think you've made this complex subject very, very easy for us to understand. So hats off, sir, to this kind of an explanation on such a complex topic. And especially with custom broking, when we are very much associated with the Customs Act, and we are also connected quite a lot with the DGFT and the FTDR Act. FEMA is something which always has been, one area where, as an association and federation, we find it difficult to approach our members with regards to their queries. And how Sudeep ji mentioned that this has been wonderful. Our chairman, Mr. Dushan Mulali, I thank him for steering the session so effectively. And of course, the entire team of Triple FAI and IAFF, the panelists, Mr. Samba Siva Rao, Mr. Dinesh Gupta, Dr. Pramod San, sir, you took the questions very well. Ms. Chaitali Mehta for all the arrangements. Mr. Sujit De, sir, you have ensured that there will be a smooth flow for the entire discussion. And we are grateful to the Secretariat of Triple FAI for all their meticulous planning, coordination, all behind the scenes, and making this a wonderful success. And sincere thank you to all our members, participants from all over the country who have joined us today. Your enthusiastic participation, your thoughtful questions is what makes this session extremely engaging and meaningful. So we look forward to all your continued participation in future for all the Triple FAI knowledge initiatives. Once again, thank you.
Yeah, Dr. Neera, one more announcement I wanted to make. On 3rd of May at 5 o'clock, we have a webinar of IIM course, which we are starting. So second batch of IIM Triple FI course, which is designed, which will be for which the awareness program we are conducting on 3rd of May at 5 o'clock. So please join on that. Please encourage your children, your younger colleagues, your staff, your bright student employees to join that webinar to understand how IIM Triple FI course will really able to take them to leap into the successful career. So please join that. You can see you can get the details on Triple FI LinkedIn website. So please join on 3rd at 5 o'clock. Thank you very much. Thank you very much.
Thank you, sir. Thank you.
Bye.
You are close, sir?
No, Sagar, if you
Yeah.
have the flyer, can you post the flyer in the chat box? Is it possible for you?
Yeah, one moment.
So, Dr. Sant, just to tell the audience, this course is about what? If you can just tell the audience, they might be interested.
Yeah. So,
I mean, it is a free of charge webinar.
Yeah.
We're just trying to introduce the session. So, little bit, 2 or 3 sentences in the meantime, Sagar can post the flyer on
the idea of this course is to combine the best of the academics. IIM Mumbai, which is one of the top institute in India. So FFI has joined hand with IIM Mumbai. So this course covers the academic parts, and the FFI covers the practical part of it, which the first batch is over. The response of first batch was excellent. The students were really found the course very useful to them, and the details of which is now on here. But the main important is that such a course is not available in India anywhere, where there is this combination of academics plus the practical part of it. And uh, the participants, after completion of successful course, they will get a certificate which will have IIM Mumbai and FFI logo, which carries a lot of value importance in the field, plus the field visit. And the students are able to go to port, they are able to go to airport, warehouse, to have more practical knowledge. There is a something called as capstone project, where your practical problems can be dealt with. You are able to make the project and find out the solution for your practical problem. So this is very unique opportunity, and the details are there. There is a QR code, and there are phone numbers available. Please connect with IIM faculties. Please connect with FFI, IFF faculties to know more about this. But please pass on these details to more and more enthusiastic students who can take the benefit of this. Yeah. I think Sagar, it is posted, correct?
Yeah, posted on the chat.
Thank you very much. Yeah. Yeah.
Thank you, sir. Thank you.
Thank you very
Thank
much.
you very much, sir.
Yeah. Have a nice evening. Bye.
Thank you. Bye.